Here. All right, well, hello there, everyone. It is Sunday, January 16th of the year 2022, and I have another special guest with me today. So I'd like to introduce you to Christopher Wan. So Christopher, go ahead and say hello to our audience here.
Hello, YouTube.
All righty. All right, so Christopher, you've been watching my YouTube channel. You've been watching Millennial Mike's YouTube channel. And I know you have some small investments you've already been investing in. So do you want to, well, before we get into investing, do you want to go ahead and just tell us a little bit about yourself, like kind of where you came from and what you're doing? And feel free to share as much or as little as you want to.
Okay. Well, I'm 23 years old. Born and raised in San Francisco. I went to college for a degree in civil engineering at San Jose State University. And currently my job, or 9-to-5 job, is working for the San Francisco Public Utilities Commission as a junior engineer. Let's see. I think that wraps it up for the intro.
All right, that sounds good then. And what I know you said you've got some small investments started already. Do you want to tell us a little bit about what investments you do have?
Sure. I have my Roth IRA. I have four individual investing accounts, 2 with TD Ameritrade, 1 with Robinhood. I know Robinhood's a little bit under discrepancy or under pressure for quality brokerage accounts. And then I have a M1 Finance account and then an additional Wealthfront account.
Okay. So are you buying like individual stocks, or are you buying ETFs, or what are you buying?
A little bit of both. I'll start off with what got me into investing, and then I can go into the details of what I invest in.
Okay, sure.
So beginning of August 2018 was when I had an internship, and I just turned 18, and this was my first experience getting like a paycheck. So I opened up a Roth IRA, invested all the money I made over the summer, and I chose to invest in individual stocks, stocks that I knew, the FANG stocks, so Netflix, Apple, Microsoft. Later on, as the years went on, I continued to invest in my Roth IRA with my entire paycheck, so maxing out the contributions there. Then I opened up a Robinhood account because I had leftover money. And from there, I guess the need to, or the urge to gamble started to kick in. So for the next 2 years, I started learning about options, day trading, swing trading, and those were all with individual stocks. Hindsight, I would say to avoid that and to go with your advice, go with long-term investing. So now during that entire journey, I also invested in ETFs. Blue, I know Berkshire is not considered an ETF, but I invested through them or with them. Using Robinhood, I was able to buy like partial shares, which is an amazing aspect of Robinhood, which is why I use them. And yeah, for like the next 2 years, I started learning how to swing trade, day trade, using options, very risky, technical analysis. And now that I'm looking back on it, I probably should have just invested in an ETF or strong blue chip individual stocks.
Okay. All right. That sounds good. Well, you may have heard me say before, and I'll say it again. I'm a very small-time contractor for the Motley Fool. Okay, just fool.com. So I'm biased towards the Fool, but that's where I learned how to do stock investing, because I found the Motley Fool in 1999, and I've been with the Fool ever since. First, I was with them just as an investor, and I didn't become a contractor until like the last 5 years or so. So my recommendation, and like I always say on my channel, I'm not telling anyone to do anything. Just my thoughts would be, if you haven't checked out the Motley Fool, you might want to give it a look and kind of dig around on the site, because they have some great folks working for them and it's their full-time job. They study stocks, they study companies, and they have that long-term buy and hold mentality, just to buy quality companies, get some in early growth, get some that are more established, to just develop a a great stock portfolio.
I totally agree. I've looked into subscriptions for Motley Fool, and I think pricing was, I want to say 200 for the first year, and then subscription based later on.
Right. What they have two sides to their company. They have what's one side is totally free, and the other side is subscription services. Their flagship service is called Stock Advisor, and Stock Advisor is usually about $199. Occasionally, you can get a special like half price. Like if you wanted to, you can just Google Stock Advisor coupon or something. You probably find something for half off. It gives you a 1-year subscription. And there's two brothers that started the company, David and Tom. And what they do, they have Team David, Team Tom. Every month, each team picks out one stock recommendation. Okay, so Team Tom, Team David. And during the same month, each team will give 5 best buy recommendations. They look at all of their recommendations from 2002 till now, and they'll pick out, if they have fresh money, 5 companies they recommend to invest in. So both Team Tom and Team David do that. So each month they're talking about 12 stocks altogether. And most folks can't afford to buy 12 stocks, but anyone who subscribes there, they read what they post, they watch their videos. Even if you only buy 1 stock a month, it just gives you a great education in a variety of different companies. Okay. All right. So let me ask you this then. You've told me before we got started, you told me you were very interested in real estate, buying rental properties. Is that correct?
Correct. Very interesting.
All right. And you said you're living in San Francisco, which from my knowledge, it is quite expensive there.
Oh man, you're telling me. Within San Francisco, it's extremely expensive. The cash flow is basically non-existent, and the surrounding areas around San Francisco, even like an hour drive, is still fairly high, especially like the nicer neighborhoods. Of course, you can find some good deals or not good deals, but lower price deals in neighboring cities like Oakland. But with Oakland, you also get the risk, the crime, lower education, stuff like that.
Right. Okay, I understand. All right. So when I talk to folks, what I kind of tell them at times is, in regards to buying rental property, both coastlines, East Coast and West Coast, by and large are expensive. And as you go inland into the middle of the country, housing prices are much more reasonable. Now, with that being said, like to use California as an example, you have probably heard of Michael Zuber. He has a channel, One Rental at a Time.
Mm-hmm. Read his book, thanks to Millennial Mike. Shout out to Millennial Mike.
Okay. But just as an example, Michael Zuber, he lives near you in Silicon Valley, but he invests entirely in Fresno, California. Correct. He says Fresno is cheaper than the rest of the state. But from my perspective, from what he says, Fresno is still expensive. It might be, $200,000 for a house. So it's still a little on the expensive side to me. Okay. But when I started off, I was living in Virginia, and in my area, it was the Shenandoah Valley in Virginia. When I first started, I could find rentals that were in the price range of $100,000. Okay. That has now changed. Now it's probably 150, 175 for a basic starter home. But even when I got started, it was just a little on the expensive side. If it's $100,000, put 20% down, it's 20 grand. And I was thinking, well, I didn't make a lot of money. So my funds were limited. So I started looking elsewhere. And when I started, I read a book by David Green from Bigger Pockets. And David Green wrote a book called Long Distance Real Estate Investing. And when I read that, that really kind of opened my eyes up to the possibility of investing elsewhere. So the first thing I did was I was digging around on Bigger Pockets, and I kind of made a contact with somebody who lives in Birmingham, Alabama. And I started looking at Birmingham, and Birmingham had houses that were in the range of $20,000 up to $2 million. But
Wow.
you can find houses 40, 50, 60, 70, 80, 90,000 in that price range. Okay. So I bought a total of 2 houses in Birmingham, and I didn't have the best experience there. And I blame it on myself. I didn't find the right boots on the ground, as I call it, the right team. But then from a recommendation from someone else, I turned towards the Midwest, and I ended up going to the Northwest Indiana area. And in that area, I started with a turnkey operator. And then from using that turnkey operator, I started kind of branching out because I started making more contacts. Started using a real estate agent. I found property managers, and they all helped me to find contractors when I needed them. But up in that part of the state, this is just an example. Like, I'm not telling you to invest there, but it's just an example, because what I've done there can be done all over the middle of the country. Okay, and I'll throw some examples out. I've looked at real estate in Kansas City. I've looked at, and this is all online, I've looked at stuff in St. Louis. I've looked at Memphis, Tennessee. I've looked, what are the other places that are kind of in the middle of the country? And I can usually find single family rentals in that range, 60, 70, 80, 90, 100,000, right in there. But what I did in Indiana, I've got my team, I got my boots on the ground, and so far it's worked for me. But what I was talking with, you might have seen an interview I did the other day with Tyler. Tyler's a Navy pilot.
Yep.
Tyler was just at my house. He left this morning, and him and I were talking, and I was telling him, I'm getting to the point I like diversity. I like spreading out. So I may sometime soon start researching other areas. And what I would do if it was me and I'm researching a new area, I start digging around online, looking at housing in my market of choice. Maybe it's Kansas City. And I just start looking at prices. Then I start digging in, what are rents in that area? And maybe I find the rents online. Maybe I call a property management company and just ask them, hey, if I buy this house, what would it rent for? And I would try to research real estate agents, because most real estate agents have biographical information on their pages. And I would try to find a real estate agent who deals with investors. And I would interview them on the phone. And if they seem like they're a right fit, then I would see where it would go to from there.
And a note on finding real estate investors or real estate agents that are dealing with investors. I recently, a couple months ago, looked on biggerpockets.com, and they do have a real estate agent tab for finding or connecting people with real estate agents that deal with investors.
Okay, that's right, because I don't really look at Bigger Pockets much anymore, but I remember seeing that before. That's a great way to go, because that means that real estate agent has gone to Bigger Pockets. They're looking for investors. So that sounds like a good idea. So, well, you've watched my channel, you've watched Millennial Mike's, you've read real estate books. So do you understand the process of running the numbers on a potential rental house?
I do, yeah. Funny enough, my dad used to be in real estate, and he created a spreadsheet that would calculate, mortgage. We calculate the mortgage, if you have PMI, all the utilities, insurance, and then spit out if it cash flowed or not.
Okay, that sounds good. Well, look at the spreadsheet, because if, as an investor, normally when you get a mortgage, you're putting 20% down. And if you put 20% down, then you do not need to pay PMI. All right. So you could remove that, but then you always got to add in a percentage to account for vacancies, repairs, and capital expenditures. All right. And I normally use approximately 20% for those three categories. But it also depends on the property. If I get something that needs a lot of repairs or it's older, I may up that percentage a bit. If it's been freshly rehabbed, maybe I bump it down just a point or two. But whatever it is, let's say it's 20%. When I get my rent check in, I'm paying my mortgage, which would have taxes and insurance included in it, more than likely. I'm holding out that 20% for future vacancies, repairs, and capital expenditures. And then I'm also paying my property manager whatever their fee is, and it's usually 8, 9, 10, or 11%, depends on the market. And then whatever is left over, that's my positive cash flow.
Right.
Okay. And my goal for positive cash flow is to try to get at least $250. I'd like to get more, but I'd like to get at least $250 for each house. All right. So does that all make sense to you?
Oh yeah. Yeah.
Yeah. All right. Very good. Very good. All right. So my recommendation would be to play around some, look at different markets, and just use the internet and dig around, look at housing prices, pick cities, pick areas. You know, I've referenced Northwest Indiana. Northwest Indiana, you also got Chicago there. Chicago is a big city. I've never invested in Indianapolis, but Indianapolis is another big city that folks might invest in. I know somebody that's investing in a different part of Indiana. I know Michael Zuber interviewed some guys one time that were investing in South Bend, Indiana. I'm more up in the northwest corner of Indiana, but investors are everywhere. They're all around this country. There are people that own rental property. So I don't like to tell anyone buy in this area, because you're your own person. Do some research and just find what you think is the right area to be in. You know, if you want to go to Northwest Indiana, odds are you contact me and I'm going to help you out a little bit. But if you want to go to Kansas City or Memphis or St. Louis or Utah, then you got to find your own boots on the ground there and kind of, you know, move forward.
And what was the process for you for finding those boots on the ground, coming from, you know, an out-of-state investor perspective?
What worked for me, when I started in Alabama, I had one contact who was an investor / real estate agent. And he recommended a property manager to me, and he had contractors he recommended. But for whatever reason, it didn't work out. It was my first try at it. I still got those houses, but it didn't work out. But in Indiana, I started again with a turnkey company. I liked going that route because that broke me into a new area with a company that I had done my due diligence on to investigate, to figure out who they are. And then I would buy turnkey properties from them, which had been rehabbed. And I bought several properties from them before I branched out, because the more I started buying, I just started meeting new people. You know, like I met a different property manager, a real estate agent, and things just started happening. The more people you meet, things start happening.
Right. I find that to be true as well.
Right. So, but even like with this channel, you never know. There may be somebody that watches this interview. They may comment on it and they may give you a suggestion of something from their perspective, and that might get you kickstarted with whatever they say. Or maybe you and I 5 years from now, we're meeting up talking about how you started investing in Northwest Indiana or Southern Indiana or Memphis, and now you got 50 rental houses and you're no longer working for the city because you're financially independent.
That'd be great. I'd love to tap into your YouTube audience. If you guys have any advice for young aspiring rental investment portfolio.
Yep. All right, that sounds good. And if you want, look, if you haven't watched it already, I did an interview with a young man named Robbie. Robbie was a tenant of mine who bought my triplex. All right, and he's a little bit older than you. He's 28, and that was his first rental property. But you can kind of watch his interview, and if you haven't seen it already, you might pick something up too that will help you out as well.
Yeah, these interviews have been great. They can focus more on the already established portfolio rather than like the first house, but they've given their stories on how they got the first house, and it seems so simple, yet it from the perspective of a person that does not have a rental property, it seems daunting. It seems more complex, but everybody's story has been, they got the first property and then they just begin rolling.
Right, that's correct. Because even the interview I just did with Tyler mentioned he had what was called analysis paralysis for almost a year. He was looking into, because Tyler is an engineer by trade as well. And this is just my perspective. Engineers analyze numbers, and sometimes by the analyzing, they start digging, analyzing, and they get caught up in it, and they don't take that first step. But and I've said this on my channel before, sometimes, like myself, I'm the sort of person, when I got started, I literally just jumped into it. I did not look at YouTube. I did not read any real estate books. I did not study it. I called a realtor up that I knew, and I said, hey, I want to buy a rental property. And I just jumped into it, and I struggled at first because I screened my tenants poorly, and I got a bad tenant in there, and I had to evict her. And so it was a rough start, but I learned from it. And I eventually I didn't find YouTube, but I searched for real estate folks on YouTube. I found Bigger Pockets. I ordered half a dozen books from Bigger Pockets, and then I just kept moving forward, and it's a continual learning process. So, and the cool thing is, the more folks I talk to, the more stuff I learn. It might be beneficial for you, but it's beneficial for me as well.
One question: did you run the numbers on your first property?
With my first property, no. What I did, my real estate agent I was using, she was kind of old school. She was older than me, and she had a whole bunch of rental properties. And we found a house that was $97,000. And she told me she thinks it could rent for $900 or $925. And I just sat down like, okay, if my mortgage is $97,000, I would put this much down. I'll have this much left over. And I knew enough that I would need to hold money back to fix, for repairs. But I didn't have like that formula per se. But in a rough sort of way, I did run the numbers.
Right.
Without knowing what I was doing.
And that's what got me into real estate investing. The idea that somebody could pay down a mortgage with the only cost of the down payment, right? The only cost from you would be the down payment, and then somebody else, your tenant, would be paying your mortgage off with extra reserves for maintenance and vacancy. So that idea is powerful.
It is. I was a stock investor for 20 plus years, and I love stock investing. But when I got into real estate, it didn't take me too long till I realized, wait a second, with stock investing, I have to put my money into it and then watch it to grow, hopefully, over time. With real estate, I put 20% in. The bank gives me the rest, the 80%. It's the power of leverage. I'm leveraging a smaller amount, but reaping the rewards from the entire say $100,000.
Right.
And at the same time, my tenants are paying my mortgage down for me. My tenants are paying my taxes. My tenants are paying my insurance, and my tenants are paying for my repairs. Knowing that, it's almost like it's a no-brainer, you know?
Exactly. Going into it with just stocks, I didn't know that existed. Like, I didn't really know anything about real estate. I thought people only bought real estate for their own primary housing, you know? So yeah, I'm glad I found all the YouTube channels and found your YouTube channel, read all the books, and discovered real estate investing.
So, all right, this sounds good. All right, well, I guess we can wrap this up, and maybe, you know, we can chat again sometime later after you've gotten your first rental. So, but if you want to, I'll give you the final word. Is there anything you want to say just to kind of give a conclusion to today's talk?
Yeah. Thank you for having me on this channel. I would say to the young investor, start saving up your money as much as possible. I started off with saving up birthday money, Chinese New Year money, and then eventually funding my own Roth IRA. So saving it up, investing it definitely brings a mindset of long-term wealth, and good luck on the journey. I think those that follow you on YouTube are definitely savvy. So thank you.
All right, you're quite welcome. Well, Christopher, it's been great talking to you. Maybe we'll meet up one day. So I appreciate you being my guest today, and we could stay in touch. All right, so audience, I hope you enjoyed this interview. So for Christopher and myself, we thank you for watching, and we will be signing off. So take care, and Mazske is signing off.